Hello and welcome to the Chamber Music Mindset. I am your host, Anna Rathbun. I need to remind you before I start that what you're about to hear is not investment advice or solicitation. This is for information purposes only. It is for education, and it really is all my opinion, except for some of the numbers and facts. It's really my interpretation of what I think is happening, and hopefully that will help you understand what is happening around you. And I think it's important to. All right, let's get to the markets. We ended the week in the red last week. It was actually a pretty volatile week led by the tech stocks. Why the tech stocks? It's because they were really expensive. Valuations were high. It was very, very expensive. And when the markets experience some jitters and go, maybe not everything will go up, let's sell, they tend to sell the expensive ones first, right? Unless there is some kind of a headwind to a particular sector. So not too surprised to see tech lead the sell-off. So here are some numbers. S&P 500 index, large cap companies lost 1.61%. Small companies represented by Russell 2000 lost 1.86%. So small caps lost a little bit more than large caps, but frankly, it was just a down week for everybody. Now, what was interesting was the discrepancy in the growth versus value styles. So as a reminder, growth stocks are the ones that tend to be expensive because investors are expecting to invest into the future growth of the company. So they're not necessarily looking for today's, sure thing type of an investment. They're looking at long time horizon. So tolerating high valuations, high prices. The valuations have gotten really high, but nevertheless, that is sort of the characteristic of growth stocks. Value stocks are the cheaper stocks by price to earnings, certainly, and in the Russell indices, it's really measured by price to book. And so you tend to have sectors that are a bit, related to the old economy, like industrials, manufacturing type of companies, whereas the growth companies are led by tech and the names that that are in the Max 7s, right? Okay, growth lost 2.95%, so lost almost 3% for the week. Value was flat, so it lost less, negative 0.03% for the week last week. So last week was a time when everybody sold off things that were expensive, a little bit of soft sell-off on the value, but frankly, if you were to look at the individual stocks, there were a lot of them in the positive. So there was definitely a rotation last week. So I talked about valuations. What drove it? Yes, some jitters. But I'm going to talk about a stock in particular that I think is a notable example. It's Palantir. Palantir actually reported earnings last week. Spectacular results. Total revenue increased 63% year over year, and net income tripled during that time. The guidance for the rest of 2025 was higher than anybody could expect. I mean, it'd be great if all companies could report that kind of earnings, right? No, despite the fact that the report itself was good and the fundamentals were good, the stock fell dramatically. Why? Because maybe it has something to do with the fact that its PE ratio is 600x, 600 times or 600 multiple. It's expensive. And when the market gets scared, it just gets scared. It's sell now, think later. Yeah, I mean, that's a funny example, maybe not too funny for for Palantir, but as an observer of the markets, you see this type of thing happen all the time. For a long time, Apple used to beat it out of the park, and its stock would fall each time. And that's because the expectations are high, et cetera. And that just happens. And that's another thing about the markets that everyone has to be careful about, is that markets tend to be very fickle, emotional. So when it decides to turn on its sentiment, it can turn really quickly. Like, this is why you can't time the markets. No one can time the markets. When it's excited, the excitement knows no bounds. When it's fearful, it can know no bounds unless buyers come in. Okay, so the market's a large place with a lot of different participants. It's almost impossible to know how those people will trade and what the incentives are for all those people. Okay. The other thing that happened was a gentleman named Michael Burry, and you probably know this name because if you watch the movie Big Short, this character was played by uh, Christian Bale. He kind of looked scruffy in the movie. I just saw the movie actually just a few months ago when I was on a plane, a long flight, and I was just bored and I played it. I had this thing where I was like, I'm never going to watch that movie. I know what happened. And frankly, like it was a very gross generalization of what actually happened, but it was very entertaining. Anyway, so Michael Burry came out and filed a report, and the way the headlines reported on this was that Michael Burry was shorting NVIDIA and Palantir stocks. Now, to short something means to use your money and actively bet against it, so that when that stock goes up, you actually lose money, and when it goes down, you actually make money. You really have skin in the game. That's what it means, and you really are betting against the stock when you short it. So some of the headlines said that, and I thought, wow, he's a very brave man. But what it actually was that he actually bought puts, which means he just bought insurance on Palantir and NVIDIA. That is not betting against the market. That is not shorting the market. Very, very far from it. So there was this someone like him who sort of predicted the storm brewing in the markets, financial markets, for the 2008, 2009 downturn. For someone like that to put insurance on something, it can catch people's attention. I think there was a little bit of a sell-off related to that. I don't think it lasted the whole week, but certainly there was a lot of talk around it. So yes, the week was negative. What I saw at the end of the day Friday was that the market actually closed with buyers coming in. So it drew a big V and it bought into the close. And that to me meant that there were, buy the dip type of buyers coming in, investors coming in. I would have been more worried if we sold into the close to end the week, because then you just don't know what will happen on Monday. It gets a little bit nervous. But forget that. The shutdown, the possibility that the shutdown will end became the thing that moved the markets on Monday anyway at open. So, sometimes, it's impossible to predict the markets, but sometimes you think you know something and then something else happens. This profession is very humbling. That's another reason why I love it. Hello and welcome to the Chamber Music Mindset. I am your host, Anna Rathbun. Now, I want to talk about two topics today. I sort of like this setup where we talk about, I choose like 2 or 3 topics and just dive into them rather than trying to tell you everything that happened last week. Because sometimes too many things happen and then it becomes a hodgepodge. So the first thing I want to talk to you about is the K-shaped economy. The second thing I want to talk to you about is Mr. Jensen Huang's comments last week, the CEO of NVIDIA, talking about how China will win the AI race, what's behind that, and what I think about it. So let's start with the K-shaped economy. You might be wondering, why is this lady obsessed with the K-shaped economy? I'm sort of obsessed with it. The reason why I think it's important to talk about this is because, number one, it impacts all of us. So K-shaped economy, as a reminder, is K has 2 legs, one going up, one going down. It means that there are people who do well and people who are not doing well. Right. And then there are businesses that are exposed to, things like AI that they're benefiting from, and everyone else is sort of struggling. That's a K-shaped economy. It's not the best way for the U.S. economy to grow, but that's sort of what we are seeing today. I'm sure you're reading about it everywhere. And whether we are in that position of inflation really biting into our wallets, inflation really curtailing our purchasing power and making things difficult. For some people, it's an existential thing, right? You really have to take it from somewhere else where you need to buy in order to buy this other thing. All of our needs are different and all of our circumstances are different. It might be us that's facing it, but it's also might be, someone we know, right? It could be our neighbor. It could be our sibling. It could be our kids, right? I mean, if you have children who have just come out of college, they may be facing a job market that looks very, very different from like 4 years ago, right? So this is why we need to care, is because it impacts us and the people around us. It impacts us as a society. And ultimately, a K-shaped economy that lasts a long time is really not good for the country. That's why I'm sort of obsessed with it. Okay, so let me talk about what pointed to a K-shaped economy last week, what stood out to me. The first thing was the consumer sentiment. So on Friday, the University of Michigan Consumer Sentiment Index came out. It's the preliminary version for November. The final version will come out later. The revision doesn't change too far from the preliminary release. It came at near bottom, record low. The record low was surprisingly, I was a little surprised to see this. I thought it would be 2008, 2009. It was actually 2022. 2022 in June, after the Fed started to really hike rates really fast in a short amount of time. It was a shock to the system. A lot of people were impacted by it, and consumer sentiment fell to the lowest on record. That was at 50.2 preliminary, I believe, and 50.0, which was final. Last Friday, we clocked in at 50.3. It's near record lows. Okay, so we're not feeling well as a society. And what's on our minds? Employment, right? I mean, labor market has been frozen. If you're an employer, would you be going on a hiring spree right now? Probably not, especially if tariffs are making it difficult for you to understand what your cost structure is and what it's going to be going forward, because we keep going back and forth on these tariff policies, especially with China. The other thing is, I think a lot of companies they were on a hiring spree right after the pandemic. Remember when there was like this labor shortage and companies were hoarding employees because they were so afraid. It was so difficult to find people that if they hired them, they would just hoard them. Even if they couldn't use them, they would hoard them. That's not the case anymore. And a lot of companies are feeling nervous, and they're starting to sort of correct some of the overhirings that they may have done in the last few years. So, the market isn't looking very well. And listen, like, we feel it all around us. We hear about it in the headlines. Last week, I mentioned Target, Amazon, UPS. There's a lot of, changes that are happening to the labor market that we hear about that impact our psyche and our sentiment. So not surprised. Now here's hard data for you. ADP reported that we gained 42,000 jobs in, October. I forgot what time of the year it was. ADP, 42,000 jobs. Now, compared to normal times, that's not high in terms of numbers of jobs gained. 42,000 is on the low side. I would love to see something in the six figures. This is five figures. But I will take it because the previous 2 months were negative. So I will take this positive number. Okay, so there was some silver lining to that number. But if you look underneath the headline number, what stood out to a lot of people, a lot of economists, a lot of trade investors like me, small businesses are letting go of employees. Okay, this is important because when small businesses sneeze, we need to pay attention because the economy might catch a cold. I know people tend to think the other way. If you're big and you sneeze, it might have an impact. No, it's really the small businesses in America, because small businesses are the backbone of the U.S. economy. Small businesses are very important. It's what makes everything go in the United States. So that was not necessarily good news on the ADP report. The other thing was earnings. Clorox reported earnings. They talked about sort of leaning into their super mega size deals because they're finding that the value shoppers would like to buy in bulk because per unit price is much lower that way. So they're leaning into it. It did very well for them. McDonald's, actually last week, Chipotle reported and they did terribly. And they talked about how the younger portion of our population are really not spending money in Chipotle. Well, it seems that McDonald's took those took those customers because they're offering, if you buy a cheeseburger, you get another one for $1 more, right? So I want to go try this out. I'm sure it's delicious. Last time McDonald's had a deal like this, I actually went and got a meal, and I think you got a free double cheeseburger. And I actually went and ordered it and ate the whole thing in the name of research. And I think it made me better. So I might try this week and report to you next week. Okay, so that's on earnings and corporate reports of how their consumers are behaving. Now, the K-shaped economy is not just on the consumer side, it's also on the business side. So if you think about who is benefiting right now, it's all the AI related companies. So think Max Evans and all of the companies that are tied to the AI theme. All the companies that are supplying things for data centers, construction, think energy, all these companies that are not only in tech and AI, but infrastructure and then industries that are adjacent to them, they're benefiting. Okay, so they're doing well. The ones that are not doing well, that there is a leg that's going down in that K-shape. And they're businesses that are not tied to AI. They're not necessarily doing it, or AI financing for that matter. And I mean, think this way, like McDonald's, maybe they'll ultimately use AI in their business to make things efficient, but that's way down the road. They are intimately interacting with consumers like you and me. They're on the consumer end. It's B2C. And for a lot of those businesses are struggling. So not everything is booming in the US economy. We can aggregate everything up and say, oh, GDP is this and that. A lot of that is driven by AI. If you leave that out, there are industries and businesses and people that are struggling. That is the K-shaped economy. Secretary Bessent actually came out and said that he believes that there are sectors that are already in recession in the United States. I was a little surprised that he said that. I've always thought that. I've always thought that there was a rolling recession happening for a while. But for the secretary to come out from the White House, come out and say this, I was surprised, but I do think he's correct. So what industries might they be? Housing, right? Housing market's frozen, and if your business is tied to housing, whether it be residential construction or lending, right, mortgage origination, all of those things, very, very difficult right now. Let's see, auto sector. So auto sector, why? Auto sector requires financing, and interest rates have been high. Auto prices also have been high. And we know that there have been a lot of defaults or delinquencies in payment in auto loans. And I think I might have reported on this a few weeks ago that repossession of cars numbers is actually skyrocketing. It's not good news, but certainly auto sector is suffering. Manufacturing is also suffering. Remember the ISM PMIs 50 is neutral. Anything above 50 means that the economy is expanding. Below 50 means that the economy is contracting. The manufacturing PMI has been below 50 for a while. Not only the main composite numbers, but also regards to employment of manufacturing and new orders in manufacturing, they're all below 50. So it's been underwater for a while. So not everyone is enjoying the AI boom. Not everyone is happily getting through this inflationary period, it's difficult for a lot of people. We do need to care because it is, our neighbor, right? It is part of our society. Um, it might be someone it might be someone in your community. And to understand what is happening, understanding how to help would be another avenue here, right? But I do think it's important for all of us to understand why people are struggling and what it looks like when you actually look under the hood, because those top line numbers are going to gloss over a lot of these details that I think is beneficial for all of us to know. Now, I want to talk about two topics today. Last week, Mr. Jensen Huang, the CEO of NVIDIA, made headlines by saying that he believed that China will win the AI race against the United States. He cited looser regulations in China and more government support for those tech companies, and what he called the cynicism here in the United States with regards to AI. I don't know if I would use the term cynicism. I might call it skepticism. And it's not so much skepticism about what AI might be able to do. I think that a lot of that has been tempered down. It's more around consumer protection, I think. But certainly that actually creates more red tape, right? And regulations. It's a double-edged sword. So what I thought in the beginning was, Mr. Huang must be pretty upset about not having access to the China market because of the trade talks that's happening right now. He's not allowed to sell his best chips to China. Okay. And I can totally understand that. He sees his other tech colleagues having access to China and he doesn't, right? So last year, or was it earlier this year? Oh my goodness, time flies. He had to write some of that down in, his company reporting to say, okay, we're assuming zero revenue from China, and there was a market reaction at that time. But I think it brought me to a different thought, and this is really my musing. It's really distantly related to economic progress and the economy. It's more about like a philosophical thought about what AI race really means. What does it mean to win? What is this AI race? Is it to create the most chips? Is it to create the most intelligent AI bot or an agent? Is it to create the first sentient AI bot? I mean, are we just looking at it from a technological point of view? Or does it mean maybe this is difficult to quantify, but increase in GDP growth aided by the productivity that is brought on and efficiency brought on by AI, helping us to work more efficiently, to work better, et cetera, et cetera? Or is that winning? I don't think we've defined it as a society. And I think at some point we need to, because, I love my tech friends, but they're always going to look at it from a tech perspective. And then there are those of us out here who love tech and support tech. And, by all means, we don't like to lose. But we need to also think about the other areas of our society, right? Certain regimes might be inclined to direct all of their resources to win such a race, whereas in America, that's not how we're built, right? There are industries that will benefit from AI, but it's not necessarily tech, and those industries need to thrive as well. You and I need to thrive as well. And so from my perspective, winning really is enhancing all of our lives, right? And so I probably fall into that second camp of increasing GDP, having economic growth that benefits the entire country. That's probably how I would view it. I'm not sure if that's what Mr. Huang meant it. But, at some point, as we continue to race to build more data centers and negotiate with rare earths and maybe go mine it ourselves and refine it, etc., I think it's an important thing to think about. what does it mean to win? What is this race really all about? Without understanding that, um, and I'm not saying that we will either, but without understanding that, sometimes winning can become meaningless by the time you get there. And sometimes it's a Pyrrhic victory. So, anyway, I'll get off of my soapbox and tell you that I am very excited that the shutdown is coming to an end. As of the recording tonight on Tuesday, it isn't over yet, but I am hearing that as soon as Wednesday, we will have we could have the government reopen. Thank you to everybody who has continued to serve without getting paid, especially to those air traffic controllers who have all kept us very safe. Thank you, thank you. And as the government reopens, we're going to be starting to get data releases, and as they come out, I will analyze them and share my thoughts with you guys. So have a wonderful week. Last week, Mr. Jensen Huang, the CEO of